Okay, now let's see how we get the buy signal using the highs of the last completed secondary reaction. This is the mirror image of the previous cell we have explained, and this happens when we don't get the ordinary buy signal, which happens normally 90% of the time, but what happens the 10% of the time that the market does not oblige and we don't get the normal typical buy signal? Then page 77 of this book comes to our help. Let's imagine we are now in a bear market, the Dow Industrials. The market is going down. Each rally is a secondary reaction. Here, secondary reaction, secondary reaction, secondary reaction. The same applies to the Dow Transportation. It is a bear market. Reaction, lower low, reaction, lower low. And we get finally a rally, but this rally does not oblige and does not stage a pullback, which could be the normal Dow theory buy signal. Which, no, it doesn't oblige, so instead of doing that, it continues going up, 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 up. And the same happens to the transports. It continues going up, up, up. So in this case, once again, we have to keep an eye on the, in this case, on the highs of the last completed secondary reaction. As I repeat, this is a bear market, as you can see, lower highs, lower lows, and each rally, provided it lasted 3 weeks and more than 3%, is a secondary reaction. So then we keep an eye on the highs of the last completed secondary reaction. And I will make a horizontal projection. If these highs are jointly broken up by both the Dow Industrials and the Dow Transportation, it means that here we get our buy signal. This is very important to keep in mind. It happens only 10% of the time, but it is really vital because otherwise you wouldn't have an entry point or a sell point. And you need, because imagine that finally you get the normal sequence of pullback, break up at, I don't know, 30% higher. So then you would be much too late. And this is why, by the way, many critics of the Dow theory say that the Dow theory is always too late. And of course, it's going to be too late if you don't use all the tools that you have at your disposal with the Dow theory. If you only focus on the typical buy signal, then you will be too late. Another typical misunderstanding with the Dow theory is that some alleged Dow theorists say that for a new bull market, for a buy signal, the highs of the last bull market must be exceeded. So let's imagine that this was a bear market, and then we have here the highs, the latest highs of the last bull market. So some say that these highs should be jointly broken up by both the Dow Industrials and the Transportation. Of course, if you wait for a signal until you get here, then of course you will always be too late. Of course, it is bullish that the highs of the last primary bull market are jointly broken up. Of course, this is a bullish sign. But something being bullish is not the same as saying that this is the buy signal. To make money in the markets, you have to buy and sell at the right prices. And it is true that we trend followers don't buy at the absolute bottom because we need to discern that a new trend has emerged. But of course, if we had to buy at the highest high of the last bull market, then inevitably we will always be very late. So this is another common misunderstanding. So now you are starting to get an idea. If you start demanding the last primary bull market highs as the relevant levels to be broken up, or you ignore the highs of the last completed secondary reaction as an alternative entry point, which happens more or less 10% of the time, then your Dow theory is going to be defective because you have several tools in your toolbox and you are not using all of them, and furthermore, you are misunderstanding some of the tools. They say, no, because the principle of confirmation means higher highs. Okay, higher highs, but you don't have to surpass the highest highs of the previous bull market, because then you are going to be always late.